All right, for those of you hoping to see part two of my Louisiana series, you'll unfortunately have to wait a couple more days, as we did get a tariff filing out today from Plains Cactus II pipeline, which I think is interesting, and will have implications for Permian recontracting and Permian rates for some of those egress pipelines out of the basin. So without further ado, I'll jump in. Just really quick, I will do a summary article below the video for those of you who don't want to watch me yap for 10 minutes plus. Also, I will do a short 2 to 3 minute just summary for those of you who want to drop off. So hitting the main points here over the next hopefully 2 to 3 minutes, so you guys can drop off, and then I'll go a little bit deeper into some of the history of the contracts and the pipe after those 3 minutes. So let's jump in. Just a quick overview of the pipeline we're talking about here. This is Cactus II pipeline. This is owned 70% by Plains. This is owned 30% by Enbridge, the JV. Just quickly hitting on the egress flow point here. You can see this pipe stayed relatively full the last 8 months. Moments during its history where it's run full. Moments where it's had open capacity during COVID, things like that. The tariff filing that we got today, and I'll switch up to that really quick, is a tariff filing on committed A-level shippers. So this is going to be Trafigura's contract, and Trafigura was the anchor shipper and is the anchor shipper on this pipeline. They had a committed capacity of 300,000 barrels a day. Their original contract, which started in 2019, was a 5-year contract for 300,000 barrels a day. That contracted capacity was stretched out in 2021 due to the downturn in the oil markets due to COVID. Plains and Trafigura came to an agreement to stretch that contract out. What happened with that contract was they did lower the committed rate over at that time, and then slowly ramped it back up to 300,000 barrels a day over a longer timeline. It basically kept the total committed barrels over the life of that contract the same. It just allowed the life of the contract to extend another 1.5 years, essentially, was the estimate that they made. So what's interesting about this tariff filing, and what makes it a little bit opaque and hard to tell what exactly is going on here, is number one, we don't have a set end date of that Trafigura contract. The end date is whenever they fulfill their 547 million or whatever the number of total barrels over the contract is. That was estimated to be 6.5 years when Trafigura and Plains did the recontracting in 2021. 6.5 years from the beginning of the pipeline. So that would be run out here in sometime in right around 2026. However, that could go up or down based on how much was actually shipped on the pipeline. Trafigura could have shipped over their committed amount, and that would have exhausted faster, which is what I think happened. So right now we're at the 6-year mark. This pipeline came online in July of 2019. So we're right in that time frame where it's certainly feasible, and I would say likely, that Trafigura has completed their entire committed contracted capacity. So we did get this rate decrease from $1.30 to 90 cents, which was released today. And just to give you a quick overview of what that could potentially mean for the revenue and EBITDA on the pipeline. Under the old rates, this is Trafigura's contract I'm highlighting here. Trafigura's contract was 142 million of the revenue on the pipeline. Pipeline revenue is right around 260 to 280 million in annual revenue. So this contract represents about half the revenue on the pipeline, maybe a little bit less. Under the new rates, and again, I'd like to reiterate, it's not clear if there's an actual new contract signed here. It's just saying this new rate's available to Trafigura, essentially. So I don't know what the terms, other than the rate of a potential new agreement is. It could be a higher committed capacity. It could be a lower committed capacity. Since the pipe's full, I say it's unlikely to be higher. It's possible that it's lower. But under this scenario where we assume it's the same committed capacity, the step down is about 43 million in annual revenue. So that's 10 million in revenue / EBITDA a quarter. Just to give you again, that's it's about 260 to 280 million of revenue on this pipeline per year. The EBITDA of the pipeline is about 65 million or so a quarter. So this is a reduction of about 10 million off of that, 65 to 70 million roughly, a quarter of EBITDA. So about a 15% reduction, 14% reduction in EBITDA under this scenario. Certainly not something that you'd like to see on your pipeline, but not the end of the world for companies the size of Enbridge and Plains. So that's a quick overview. For those who want to drop off, you certainly can. I'll dive a little bit deeper into some of the tariff history, some of Trafigura's their recontracting potentially, and why this might be a little bit of a bigger deal for the other Permian companies down the road, the other Permian pipelines that have to do recontracting as well. So let's go back to the map. So as I mentioned, Cactus Pipeline, almost all of the flows or all the receipts from this pipeline come from Midland here. So you can see they're come from the Midland or the Plains terminal in Midland, and then they're transported. I showed you guys the flows. I'll just bring them up again really quick here. Pretty full, and then most of the flows go into Ingleside here. So Ingleside, with most of the barrels going to Enbridge's Moda terminal. There was a time period where it looks like they switched over to the Flint Hills terminal and then back to the Moda terminal, which is kind of interesting. Other things to mention, if we look at the actual tariff and look at the history of that tariff. Let's go tariffs out from here. So this is the Trafigura tariff, and it started a little over $1 when the pipeline came online. Slowly stepped up over time. You had this big index adjustment because of the inflation that we had post-COVID that stepped it up here. So now you can see where we're at today is right around $1.30, and that's it appears is going to drop back down to 90 cents under this what we consider or think is a new contract on this pipeline. So again, this isn't terribly material to companies like Plains, especially since this is a JV. Enbridge won't feel this at all. You probably won't notice this in Plains' financials. But what this does is it sets a marker on recontracting rates for the rest of the basin. So I think that there was a lot of hope from midstream companies that they could kind of wait out this horrible scenario. And I'll bring up the graph here. The horrible scenario that they had really when COVID happened and all this capacity got built out in 2019 and into 2021 with Wink to Webster coming online. So you had a 2.5 million barrel a day gap between the capacity on pipelines going to the Gulf Coast. So this is going to be Ingleside, Corpus, and Houston versus what was flowing through those pipelines. So pre-COVID, you saw the big ramp up in volumes in the Permian. I think everyone thought that this ramp would just continue to be kind of like this over time. And obviously COVID happened and things stagnated and fell off. But slowly we've been battling back and filling these pipelines to the Gulf Coast. And with recontracting of some of these pipelines coming up, I think there was hope that you could get a little bit closer to this capacity line. We could see spreads between Midland and Houston or Midland and Corpus widen a bit, and these contracts would be able to be restruck at least the same rates that you originally got them at, that kind of that $1.40 to $1.60 range, but maybe even better rates. But it appears that that's just not going to happen if this is the marker that we're going to set at 90 cents for Trafigura. I don't think most shippers are going to be able to get the 90-cent rate that Trafigura got. Trafigura obviously has size and scale that most other committed shippers don't have. However, a 30% reduction in rates is tough to look at, and it's going to be tough. To me, it means that there's a lot of competition for recontracting if Trafigura was able to get a 30% reduction on an already pretty average rate, maybe a little bit better than average rate for them to the Gulf Coast. So looking at this graph, I mean, it doesn't look bad. Historically, when we get close to the capacity line like this, you do see spreads start to widen. I think there's a couple things going on here. I think, number one, we do have more capacity coming online, so this does not show the small increase from Gray Oak in April of their capacity coming up a little bit. There's also another small increase from Gray Oak down the road in a few months coming. You see this downturn here. That's Enterprise taking off one of their lines to switch it over to NGLs. That's being switched back to oil toward the end of the year. And then in an environment where we're at $65 crude oil, there's a lot of uncertainty with the market. There's a lot of uncertainty with politics and tariffs and stuff like that. I just don't think you're going to see a lot of growth out of the Permian unless prices really ramp up a lot. So I think you'll see stable production in an area in a time where we have stable production, and let's call it 700,000, 600,000 barrels a day of gap capacity, ramping to maybe 800, 900,000 barrels a day when Enterprise brings their pipeline back online. I think it's unfortunately going to be a tough recontracting for some of these contracts that need to be renewed. I think there'll be a lot of competition. Again, I'm not predicting 90-cent rates for the common recontracting, but I do think you'll see rate cuts for most of these contracts. I don't think I have much else on this one. This was interesting. I wouldn't have predicted a 30% cut on this one. Certainly maybe a small cut, but not a big one. So we'll see what happens, but it's a bit of a tough scene for some of these guys that have tried to wait out a huge overbuild out of this pipeline post-COVID to try to have to recontract it at significantly lower rates. Housekeeping items. We've had a few people reach out over the past couple weeks, asked us to help them with some stuff. More than happy to do that at this point. We are doing everything for free at this point. Reach out. We want people using the tool. We want to be able to help people. We want to make those connections and start building relationships with people. If you have anything that you want done, any pipes you want built out, any just random questions on oil pipelines, I may not be able to answer. I have several people call me all the time and ask me questions, and I'm not able to answer them, and I'm happy to share that with them. But reach out. There are things we can help you with, and we want to continue to try to help create value and build those relationships. So thanks for listening. We'll get back to Louisiana Part 2 here in the next couple days for those of you interested in that. And everybody have a great day.